You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again, a little bit after our usual broadcast time. If you listen on demand, you won't notice because it's time for TWIFO. This Week in Futures Options. Had to race back from our live recording of the old Option Block show down there at SIBO. They're not that far away from the studio, but not that close either. So build in a little travel time. Got to say a few words to the Flow Master before we head out. All that fun. So back here a little bit later. At the end of the day, same bat channel, if not the exact same bat time. Again, if you listen on demand, you won't even notice. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-compelling, at least we tend to think so, Options Insider Radio Network. Remember, if you like what you hear, throw some stars or a rating or a comment or a like, whatever your platform lets you do. And, of course, if you want more goodness in your life, and who doesn't, theoptionsinsider.com/pro, the place to go to learn more as we keep on going right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. It's that time, listener. Usually I toss to a guest in the old CME hot seat. Since I'm doing double duty today, I get to pick, which is always fun as well. We're looking at another week, listeners, where we're back to a little bit of the old bias sneaking into the market. This week, it is mostly red, roughly 70-30, I would say, red versus green. You want to see this report for yourselves, the Movers and Shakers Report. CME Group tweets it out. We tweet it out right before showtime as well. Of course, if you want even more in-depth reporting, only one place to go, bantix.com, BANTIX.com. For the full reports, I'll be joined in about an hour with the creator of Bantix and of QuickStrike, Mr. Nick Howard, answering all your questions about futures options analysis and vol and all that fun, maybe a little AI, maybe a little equity as well. Coming up for all you pro folks, pro Q&A coming up in exactly an hour. Again, if you want to check that out for yourselves and all the other fun ones we've done, theoptionsinsider.com/pro. But now, movers and shakers time. To the dark side we go. Let's light it up. Why not, listeners? Number 5 to the dark side. Hope you like some ags, because we're hanging out in a lot of ags. Number 5, it is soybean meal, off 4.31%. Followed by number 4, still staying in ags, soybeans, off about 5.2%. Number 3, it's the big dog, still hanging out in ags. It's corn, off 8.85%. Right behind it, number 2, KC wheat, off 11.25%. And the number 1 dark side mover, also our largest percent. Actually, I take it back. There's one light side that is beating it. So we'll get there in a second. Number 1 to the dark side this week. And our number 2 overall percentage mover, Chicago wheat, off nearly 12%, 11.93%. So apparently all that premium that was being baked in there over these past few weeks from all this saber rattling, all this crazy weather we're having as well. Apparently a lot of that rolling off the table today. Now, to the light side we go. We have enough to put together a top 5, probably a top 10, but I wouldn't go much beyond that, listeners. Kind of light to the upside this week. Number 5, we've got Brent, so we're kicking off in energy to the light side, up 1.7%. It was number 4 in the same direction last week, up 4.13%, so a good couple of weeks for Brent, up nearly 6% net. Number 4, still staying in energy, it is WTI, up 1.75%. Number 2 in the same direction last week, up about 5, almost 5.5%. So a good couple of weeks for WTI. Not so good for you folks out there at the pump. Number 3, back to the ags. It is rough rice, up 1.9% out there. Number 2, back to energy. It is heating oil, up 5.25%. It was number 1 last week, up 7.59%. I know the once and future Dr. Vix, who joined me last week, was all giddy about heating oil. Unfortunately, only about 1,100 contracts on the tape, so not a big name for us to sink our teeth into out there. And the number 1 light side mover, listeners, percentage-wise, this one, just a banger. I'll have to dig in to see what's going on. Maybe there's some contract adjustments going on or something else going on, because Class 3 milk up nearly 25%, 24.78%. I have to go back a ways to find another asset that moved that much on a percentage basis week over week, which makes me wonder if something else is lurking behind the scenes. Maybe we'll find out today. But now we have to keep on rolling, and since there's a lot of energy to the light side, then we're probably going to do the rest all ags. Let's squeeze in some energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. Welcome to Energy. You know where to go to see this report for yourselves. CMEgroup.com/TWIFO, TWIFO. Easy. It's just the name of the show. Then once you're there, listeners, you pop into your drop-down of choice. We're kicking things off in energy. No nat gas this week, but we got some WTI on the old list, so we're going to hang out there. So you're going to go into energy, which is down about 2 slots. Then into product family, you're going to go crude oil, and then WTI to begin your journey. Pretty action-packed week, all things considered, out there in WTI. Percentage-wise, it's up about 1.75% from our last show, but volume-wise, looking a lot more robust. 565,000 contracts on the tape. That's well over 100, close to 150,000 more contracts than we expect for a typical week. So a lot of action out there in WTI, 81.63, so back in the 80 handle. I know a level a lot of you folks are not liking out there for WTI. And of that, over 500,000 contracts, 42.7% going in the SEP contract that expires in exactly 2 weeks. So that's perfect. That's right where our line of demarcation used to be. Obviously, all things 0 day has changed that a little bit, but intriguing stuff nonetheless. So to the SEP contract we go. What is vol and SEP crude oil, you might be wondering? 27.80, up about 1/4 point on the week, listeners. So decent, all things considered. And then to the skew, last week the puts were leading the dance, 7.3% premium to them. This week, 6% premium, so it's coming a little bit, but still pretty heavily bid. Last week, the calls, nobody wanted them, 5% cheap. This week, 4.1% cheap. So both of those wings have come in a little bit. The call's not as offered, the put's not as bid, but they're still in roughly the same shape and slope as they were this time last week. Bid to the puts, offer to the calls, just a question of degree. And in terms of puts, that's what was leading our dance this week. Listeners, it was the SEP 75 puts off to the races with 27,000 contracts. The big day actually yesterday, about 10,000 yesterday, mostly opening. Closing in on that today, though, 9,200 today. So A lot of the paper going up just in the last two sessions. 4,000 on Tuesday and about 4,000 on Monday. So closing earlier in the week on the 75 puts in September and then opening aggressively later on the week. That's kind of interesting. Given the fact that the puts came in a little bit, maybe we can assume a little bit overriding, but probably not. That's a pretty mild skew move, all things considered. I hate to read too much into just that. And if you're saying, what about the calls? Because we are up this week. Right behind it, we have the SEP 85 calls doing about 24,000 contracts. So only a few thousand contracts shy. The big day yesterday and today, again, pretty much equal. 7,800 yesterday, 7,800 today. Slightly closing yesterday. Obviously, we don't know about today's paper. 5,300 on Monday, 2,700 on Tuesday. Slightly opening both days as well. So kind of an inverse of what we saw with the puts. Opening earlier in the week, closing later in the week for the calls versus the puts, which were closing earlier in the week, opening later in the week. So intriguing. Maybe some folks looking for a fade if they are buying the puts and loading up on the calls earlier in the week, taking those off once we get a little bit of a pop. Intriguing stuff out there. Then right behind it, we have the 90 calls. So 85 in 2 weeks, not enough for you listeners. How about the 90 calls? 17,000 of these bad boys going up this week. The big day Tuesday, 5,500 on Tuesday, mostly opening. 4,800 yesterday, mostly closing. So maybe some folks putting them on Tuesday, then bailing right away on Wednesday. 3,800 today, 3,100 on Monday. So intriguing flow. And you know what? We missed one that snuck in a little bit farther out, listeners. Let's go out to October. Again, that's why you got to keep scrolling on some of these reports, listeners. The October 90s. So 2 weeks, maybe not realistic enough for you. You're thinking, okay, how about 43 days? That's enough time to get to the 90 strike. Perhaps 21,000 of these trading this week as well. The big day for these actually Tuesday. 11,000 and change on Tuesday. 5,700 yesterday. 2,200 today. 2,100 on Monday. Opening earlier in the week. Closing yesterday. Not much paper today. So intriguing stuff. Folks piling into the October 90s on Tuesday. Let's take a look real quick out there. You know, skew getting a little bit cheaper out there. The puts staying exactly the same, 7.3% bid. So no matter where you're looking, it's pretty much an equity type skew. Bid to the puts, offer to the calls. Just a question of degree. Calls got a little bit cheaper. So potentially this is an override on the 90s. Again, it's really hard to read too much into such a slight skew change. But intriguing stuff nonetheless. Let's keep scrolling around, see if we can find any other interesting and or aberrant prints. 90 strike pretty popular. 90 strike in December also going up about 8,000 times this week. So interesting. And then behind it, we have the 75 puts. Those also popular. These ones going up out here in November, 7,300 times. Pretty much 3,500 yesterday, 3,500 today. So intriguing stuff out there. 75 puts and 90 calls seem to be our strikes du jour. Doesn't matter the month out there. If we go a little bit farther out, all the way to D's of 2024, got some 60 puts going up about 3,000 times. Actually trading almost every day this week except for Tuesday and mostly opening. So some opening on the 60 put strike nearly 3,000 times this week. Interesting. 60 puts by D's of 2024. They betting on a sizable turnaround? Are they perhaps trying to get a long-term rights in this? It's not usually the typical use case. Usually it's probably a hedge by a producer or something else. But we have seen weirder things out here in WTI. But that's pretty much most of your flow. The near-dated paper stuff going out tomorrow looks like it's mostly the 80 puts, 4,000 of those. Which, again, we're hanging out 81.63 right now. We saw 2,000 of those going up today. It looks like maybe an 80.79 put spread with 1 day to go going up today about nearly 2,000 times. Maybe some folks rolling up their protection. Intriguing stuff. A day to go out there, listeners. But outside of that, not a heck of a lot of other tradable energy products. So for this Just the Facts, ma'am edition, we're going to keep on rolling right on into the complex that is dominating pretty much the rest of our tape. Yep, it's time to talk ags.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. They're easy to find, listeners. Just go all the way to the top of that alpha order list, and then we're going to dive in. Usually we go to the grains and oil seeds, but you know what? We're going to scroll down a little bit, almost all the way to the bottom of that product family list. Let's just take a quick sojourn in Class 3 milk, because that movement is, I think the technical term is redonkulous. And I'm trying to say it might be a bit of an aberrant print out here, listeners, because 25% to the upside. I'm not seeing anything like that in the actual product this week. It's off about 1% to like trading 17.08. And we did see ridiculous skew out there in that front week as well. The puts 50 points bid, the calls 50 points bid as well. I think something got a little wonky there, listeners. I'm looking right now, we have about 3,400 contracts going up, so there's not enough paper to really back up this crazy move. Looking at it's the 18 quarter and 19 quarter vertical going up. Other than that, not a heck of a lot. 100 times, listeners. And the 20 half puts going up 300 times. I'm not seeing what is causing this skew implosion. The calls went from 51.4% bid to 17 point. That's still pretty aggressively bid in these contracts that have the odd contract that have about 26 days to go. The puts were nearly 50% bid this week, 6.6% cheap. So they've swung entirely in the other direction. I'll have to dig in, listeners. Maybe a new contract was listed. Sometimes when they roll in or they adjust, look what happened with SOFR, right? Now Euro dollars is a vestigial contract. So sometimes it clutters up our works with crazy moves that are really signifying nothing out there. But intriguing stuff, Class 3 milk, doing a little bit of paper, 3,400 contracts this week, but nothing to really write home about unless you're really excited about the 20 half puts in August going up 300 times this week. But intriguing stuff. Never let it be said, listeners, that we didn't at least investigate. But let's go out now. Let's go back to our usual stomping grounds in the ags. Let's go to the grains and oil seeds. And since it's our number one dark side mover, let's go out to Chicago wheat this week. Off nearly 12%, so they are coming for wheat. The wheat gods are angry this week, listeners. Nearly 200,000 contracts on the tape, 182,000. That is nothing to sneeze at. Where is wheat right now? That front future, listeners, going out in about a day, 628 and a quarter. So off 76 handles, nearly 11% just this week. So most of this sell-off coming this week, listeners, post Monday. Obviously, you go back to our show last week, it's off about 12%. And of that 182,000, which is a pretty banger week, 63.5% going up in the SEP contract has about 22 days to go. So we're going to hang out there. What is the vol in this rapidly vanishing wheat, you might be asking? It is 36.20, off about 8.20 on the week. So vol coming in quite a bit, over 8 points. Intriguing. In terms of skew last week, the puts, nobody wanted them, 10.3% cheap. It was all about the calls. They were 26.2% bid. So we were already at a 46 at the money vol, listeners. And then the calls were 26.2 points above that. So folks liked themselves some upside in September wheat last week, listeners. It's still bid this week, but that has come in pretty much in half, 13.6% bid. That's still a strong premium, but my goodness, that's a lot of love for those calls. And this week the puts are 11.9% cheap, so a lot of folks may be using some puts to finance all that juicy upside. Let's go find out for ourselves, listeners. Looks like it was the pars, but not the 700s or the 600s. It was the 800 calls in September leading the dance this week. So bet you that wasn't the par you were expecting, nor was it for myself, listeners. Looks like the 800's going up 11,600 times this week. 4,000 on Monday, 3,000 on Tuesday, 2,800 on Wednesday, 1,600 today. Back and forth opening to closing kind of all week long. The numbers don't really line up. It looks like there could have been some rolling action from the 750s. They did about 11,000 contracts this week, also trading pretty evenly all week long. And then not to be outdone, we also have the 700s, the other pars, maybe the more relevant pars, also doing about 10,300 contracts. The volume is close enough. There could be some vertical rolling action amongst the strikes. Nothing really eye-catching here, but intriguing stuff nonetheless. Opening on the 700s earlier in the week and then closing later on the week. Kind of back and forth opening to closing everywhere else. So if they were rolling, probably wouldn't be opening on the pars that early, but intriguing stuff. Behind that, we have 6,000 of the 650 puts. Now, those sound a little bit more like it. Again, we're at a 628 and a quarter, listeners. So 650 puts in the money puts going up 6,000 times, more than half of that, 3,500 on Monday, mostly closing. So some folks bailing on those 6.5 puts, sounds like on Monday. 1,500 on Tuesday, 600 yesterday, only a few hundred today. So back and forth, mostly closing, it seems like, though. Slightly opening on Tuesday, but mostly closing on those 6.5 puts. I guess as we blew through that strike, folks taking those puts off makes some sense. And then we also have the 600 puts going up 4,600 times. The big day for those, actually Wednesday, 1,600 on Wednesday, mostly opening. 1,100 on Monday, closing. 1,000 each yesterday and today. So it looks like more back and forth on that strike. It looks like opening later in the week, which makes some sense. Closing earlier in the week. Maybe some folks deciding as we get a little bit more aggressive with this sell-off, starting to open some of those puts later on in the week. Either way, intriguing paper here for Chicago wheat. Let's just scroll around a little bit, see if we see any other interesting prints. 850s trading 500 times. Also in that September cycle, 5,000 times, excuse me. The big day, Tuesday, 3,100 on Tuesday, 1,400 on Monday. The rest scattered throughout the week. 700s in December going up about 4,000 times this week. 2,400 yesterday, 1,300 today. So that's pretty much all she wrote. A couple hundred the earlier days of the week. Looks like mostly closing. So interesting stuff here. And then also almost 4,000 of the 6.5 puts also going up in December. So those 6.5 puts are popular. 2,000 on Tuesday, I should say. That was the popular day. Monday about 700, almost 800, and Wednesday about 600, and pretty much a goose egg today. So, and mostly opening. So D6.5s, folks opening out there. Intriguing here in the ags. Let's keep on rolling. Listen, let's go out to the big dog, to corn, the king of the complex. See what they have cooking out there. Corn right now, 482, off about 39 handles, or about 7.5%. Just since Monday, go back to last week's show, off nearly 9%. That's resulting in some paper out. Usually around 400,000 contracts for this one. 586 this week, so looking pretty robust. And about 42% of that coming in the D's contract, where that future is actually at a 494 3/4. So we're going to hang out there, listeners, a little bit longer term, which is refreshing in this near-dated, obsessed world we all live in right now. In terms of vol, it's about a 26 on that D's. On that D's corn contract. That's off about almost 3.5 points. So vol coming in on D's corn, listeners. Also some evolution on the skew side. Again, we were seeing crazy bids on some of this stuff. Some of this is just, I think the technical term is redonkulous, listeners. The D's calls last week, the 25 Delta calls, 22.4% bid. So again, we were hanging out at about a 29.5. These calls were 22.5 points bid above that. The put's 8.1% cheap. That has all gone away now. The put's 3.3% cheap this week, and the call's 3.4% bid. So all that vanishing. But if you want a real premium, let's go to the SEP contract 22 days ago. Those were almost 63% bid. Oh my goodness. Those calls. That's all gone this week. 6.9%. Wow. So if you were doing a little overriding on those, you took home some juice this week. My goodness, these call premiums, some of these products are just ridiculous. At least they were last week. Well, let's get back to December, listeners. And the big dog out here in corn, it's the 500 put. So the par puts, again, pretty much right around the level we're trading. So no surprises there from a strike perspective. Doing about 27,000 contracts this week. Pretty active all week long, as you would expect the at-the-money in corn to be. About 10,000 on Monday, mostly closing. 6,800 on Tuesday, slightly opening. And then back and forth Wednesday and today, a little over 5,000 each. Slightly closing to opening on both days. Let's go out beyond that. Let's go to the 600 calls. 16,000 of those for number 2. 5,800 on Monday, mostly closing. 4,600 on Wednesday, mostly closing as well. 4,000 today, and then 2,000 on Tuesday, slightly opening there. So a little bit of back and forth on the 600s. And then right behind it, we have the 550s going up nearly 15,000 times this week. The big day today, 7,000 today. And then 3,000 on Tuesday and 2,300 each Monday and Wednesday. Again, back and forth, opening to closing. Looks like bias towards opening earlier in the week and then closing later on in the week. Just scrolling around here, listen to see if I can find what was driving those crazy skews that have now just vanished out here. Let's see if any interesting trades as a result. Doesn't seem like anything too out of the ordinary going up over the past week. If we go back a little bit closer to home to the SEP contract, the 450 puts, again, that's SEP futures at a 482 now. They went up 16,500 times this week. Yesterday and today kind of tied 6,500, 6,700 each, slightly closing yesterday. And then 1,600 on Monday also closing, 1,500 on Tuesday also closing. So folks bailing on these 450 puts in September pretty much all week long out here. And there's still 27,000 open on this strike, so there could be more to go. On the bailing front, listeners, as we keep on rolling, still hanging out in ags and this just the facts. Let's keep on going. Let's go out to our number 4 mover and shaker out here this week. Listeners, to the dark side, it is the beans. They were off a little over 5%, about 5.2%. And man, they are putting up some paper as well this week. 275,000 contracts on the tape for soybeans. Certainly nothing to sneeze at. That soybean front future, 1380.5, off 52.5 points, or nearly 4% on the week. Listeners, you go back to our show from last week, of course, off about 5.2%. And once again, as the ags are wont to do, they concentrate their liquidity a little farther down the term structure. And we're getting that in the beans this week in November. 44.1% of that paper going up in the November contract. That future, listeners, is at 1325.25. So intriguing stuff there. A little bit of a backward term structure, looks like a little bit of a premium in the near portion of the beans futures. Let's go out to the skew, and again, numbers were wonky last week. Not quite as aggressive as what we saw in the corn, but impressive nonetheless. The puts last week, 5% cheap. Nobody wanted them. And the calls, 16% bid. So heck of a bid for those calls. This week, both of those have come in a little bit. The puts, 4.1% cheap, and the calls, 7.1% bid. So the calls cut more than in half. Still a premium, though. And looks like the big dog out here in a pretty active week. It's these 1,500 calls in November going up nearly 10,000 times, about 9,500 times. The big day Monday, 4,600 folks bailing then. 2,400 on Tuesday, mostly opening. 2,100 on Wednesday, so back to bailing. Only a couple of hundred today. So back and forth, opening to closing on these 1,500s. Right behind it, we have the 1,400s going up about 9,200 times. So the similar size gives me the whiff of a roll here or some sort of vertical action, but the paper doesn't really line up. We did 3,500 on Monday, mostly closing, 3,400 yesterday, mostly opening, 1,700 on Tuesday, opening, and then a couple of hundred again today. So the trend is the same. The volume numbers don't line up. But intriguing stuff here. So we got 1,400s and 1,500s dominating the tape here in November beans. Beyond that, we go to 1,700. So the 1,400 and 1,500 calls, not out there enough for you. The 1,700s listeners, 6,500 of those this week. Almost all of that on Monday. Folks getting the hell out of Dodge. 5,300 going up on Monday, all closing. So folks getting the hell out of the 1,700s on Monday, 1,000 on Tuesday. Not much to speak of the rest of the week. So folks bailing on those 1,700s. That's probably why that very optimistic skew came crashing in. It's still bid, but not quite as bid as it was this time last week. Let's scroll around a little bit, see if we can find any other fun prints. How about the SEP 1,400s, listeners? These are only 75 handles out of the money. They traded about 5,000 times this week. 2,000 on Tuesday, mostly opening. 1,600 today, and a few hundred each Wednesday and Monday, back and forth, opening to closing on those days. And then we also have 1,300 puts going up in October. They went up about 5,000 times, 3,100 on Monday. Again, folks bailing. Folks were getting the hell out of Dodge on everything on Monday, it seems like, out here in the beans. 1,400 on Tuesday, only a couple of hundred the rest of the week. So it looks like closing earlier in the week, and that was where pretty much the lion's share of the paper went up in that contract. If we scroll a little farther out, do we see any other interesting and or aberrant paper? Nope, that seems like it. Listen, just a crazy week here. Just the facts. Diving into ags and energy. All right, like we said, Just the Facts, ma'am, edition this week. If you want a deeper dive into all this data and a whole bunch more fun, stay tuned for the Pro coming up in about half an hour. Pro Q&A session this week with the creator of all these goodies we just talked about here, Mr. Nick Howard, the creator of Quick Strike and Bantix and all that good stuff. You want to talk about AI, how it's being implemented in the futures options world and all that kind of fun. He's got a lot of goodies up his sleeve, so stay tuned for that. TheOptionsInsider.com/pro, the place to go to learn more about all of that fun. And, of course, you know where to go. Check out these reports in a lot more detail. CMEgroup.com/TWIFO, TWIFO. That's the place to go. We got to get on out of here. Back again in a half an hour for you pro folks with Mr. Nick Howard. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. Then back again after that for all you pro folks with Options Oddities. Then back again on Monday with the old OB all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.